Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got a stock market that's kind of struggling for direction. We're having some volatility. Volatility still remains elevated, right? And we're having big up day, big down day, big up day, big down day. Now, if you look at the IWM is small cap stocks. Small cap stocks, it's getting a death cross, right? The 50 days cutting through the 200 day to the downside. This means there's probably a little more downward pressure on the small cap stocks. Now the S&P is trying to regain its strength, trying to climb back up, right? I mean, S&P, we're not even down 10% yet, right? I mean, it could bounce back from here. This could just be a little bit of a correction, and then we bounce back up, start to make new highs, which is actually probably my take because they're going to add some liquidity into the marketplace. They're going to continue to print money. They're going to cut interest rates, cut them twice this year. They say 2 rate cuts, but when they cut the short end of the curve, the long end of the curve is going up, right? I mean, it's not making any sense. They cut them, and that long end goes up, up, up. I do think we're going to see 10% mortgage rates this year, but I do think inflation is far from over. Inflation has a lot to run still. I think we're going to exceed the old top, which was 9%, right? Got up to 9%. I think we're going to exceed that. Now, that's their terms. I think we're already above 9% today, and I think we'll go up, in my terms, up closer to 20%. But even in their terms, we're going to pass that 9% mark because they're waving the white flag. There's nothing they can do. If they raise interest rates up to where they should be, up to 10%, to get rid of the inflation, they can't get rid of the inflation. Government would default. All the banks would go out of business, right? And we're going to talk about that a little bit more today. But look at the HYG. The HYG is junk bonds. Now, what are junk bonds? Those are bonds issued by zombie companies. Now, what's a zombie company? Zombie company doesn't bring in enough cash flow to even pay the interest on their debt. And these are the junk bonds that people are out there buying. Well, it's not really people. It's not you, is it? Is it you? I don't think it's you. It's not me, right? So who's buying these? Well, it's the Federal Reserve, in my opinion, right? They're out there buying the junk bonds to keep liquidity into the marketplace. Now, when you see the junk bonds starting to go down, and I mean, they're back above the 50-day moving average now. They're back to close to a record high. They're holding those up, right? Because they don't want this market to come down. That's why they're pushing the liquidity into the marketplace, still pushing in that liquidity. Now, a lot of people are saying, but Mike, the stock market can't go back up. We got tariffs now. Tariffs are going to be 25%. And you're probably right. We're going to have tariffs, but the tariffs, are they going to stay on? Is he going to take them off next week? Put them on 1 week, take them off the next week? I mean, it's kind of like, are they good for us? He says they're good for us, right? Donald says they're going to make us a lot of money. I say that you're going to be the one paying all that money. It's a tax. It's a tax. They tax everything now. Inflation, same way. Inflation is just a tax, right? It's the stealing of your money. Tariffs, you're going to be paying those. Donald says the other countries are going to be paying them, but I don't think so. He says they're not inflationary. I'd beg to differ. It's a one-time inflation jump of 25%, which is going to make that 9% number. We're going to get right past that really quick, right? But yeah, I agree. It's not a continuation once you jump to 25%. You stay at that level. Now, will prices come back down when they take the tariffs off? You know, usually doesn't work that way. Once they bump those prices back up, right, they never seem to come down. Isn't that fascinating? Look, there's no reason for them to come down because inflation's going to stay here, and we're going to continue to print money. We're going to continue to inflate, and I think we might even reach a hyperinflation number. What is hyperinflation? Like 50%, but not a year. I'm talking a month, right? Because we have this currency problem, and it's sad. It's sad. You see gold, like it goes up, goes up. Now, we had a little bit of a pullback, right? We're getting a little bit of a pullback down here around the 3,000 level, which I keep telling you is very inexpensive, very cheap. Some people think that's in a bubble. Look, gold will be in a bubble when it gets to 1-to-1 with the Dow, right? When it gets to 1-to-1 with the Dow, what's the Dow? 41,000. When gold hits that number, 1-to-1 with the Dow, then you probably got a little bit of a bubble going on in gold. But it's going to easily reach where it's 1-to-1 with the S&P. S&P, what is it, 5,600? It's going to be 1-to-1 with that relatively soon. We're going to say at 3,000. We'll probably jump up to that 5,000 level level relatively quick. But we'll probably get a pullback. Some people say, but Mike, gold can't pull back. It only goes up. And I'd beg to differ on that too. There's no bigger gold bug than me, right? I believe gold's going a lot higher. But nothing goes straight up, and gold's pretty much gone straight up from 2,000 to above 3,000 now, right? It's due for a pullback, a 10% pullback. That would be a healthy correction in gold. That would make gold even stronger to get ready to go to that 5,000 level, the 10,000 level. You need a healthy pullback. It can't just go straight up. Of course, I suppose it could. Central banks could reprice it, right? It's come out tomorrow, and the U.S. could say, we're going to reprice gold at $10,000 an ounce, meaning they'll buy any ounce of gold you got for 10 grand, because I think they got a lot of room in the vault. I don't think we have 8,000 tons. I really don't. I think the vault at Fort Knox is empty. That's just my take. I think there's cobwebs in there, so maybe they start buying gold from everybody. And maybe they start buying that at $10,000 an ounce. We don't know what the reset's going to be. We don't know what that price is actually going to be. A lot of people think it's going to be a lot higher than 3,000. We know it's going to be at least 3,000. Why would you reset it at 2,000 when gold's already 3,000? Yes, they're holding it at $42. They're going to readjust that higher. I do believe that. And I do believe it will be well above $3,000 that they adjusted to. We'll see how that all plays out. Now, in my last video, I got a lot of comments on the Social Security, right? I say Social Security's in a lot of trouble, right? I say it's the biggest Ponzi scheme going. Look, you're working out there, right? And it's not for you. You're working there. They take that Social Security money for. No, it's for the people that are already collecting. There's no money left over for you when you get there. Just forget about it. But they're going to keep taking that out of your paycheck. They say, but Mike, Social Security's not broken. The Doge boys are in there. They found all this fraud, right? They found all this fraud. People 300 years old getting Social Security. And I want them to find the fraud. I want them to get rid of the fraud. But here's the thing. When Social Security was invented, right? I mean, when invented, I guess it was an invention. Okay, we'll call it an invention. They invented it back in the 1930s, right? And back then, you'd collect Social Security when you got to age 62. Well, the average age of people dying was about 60. So if you lived 2 years longer than the average, you could get a little money for the rest of your life. But here's the thing also. Look, there was 158 people working for every person that was getting Social Security. 158 workers, one person collecting the Social Security, right? So they kind of were sticking the money away for the future generations. Well, how's it now? Well, right now they got just only two people working for every one person collecting Social Security. This doesn't work, right? I mean, those people, they're not even bringing in enough money in Social Security to pay that one person. So we're just melting down the Social Security fund. It's out of money. They've stolen your money. Social Security is the biggest Ponzi this world has ever seen. It's between Social Security and Medicare. We have over $120 trillion that we don't have the money for. What are we going to do? We're going to print, because if we take those away, people will get the pitchforks out. People will get upset, right? People will get upset after they paid in their whole life, and then the government comes out and they tell you, oh, the money's all gone. The money's gone. And look, it's sad that the government steals your money. They steal it with tariffs. They steal it with inflations. They steal it with taxes. Look, I know the government needs money to work, right? But maybe those Doge boys, they can solve all the expenditures that are unnecessary. But what we got is we got gold, and gold's flashing a signal right now. It's flashing a big red signal, a big neon sign. It's saying that the dollar is another fraudulent thing that the government's doing right now. They've stolen 99% of your purchasing power, and that's by their own definition. You can go on the Federal Reserve website and see the purchasing power's gone down by 99% since the Fed started. Now, I think if we got rid of the Fed, we wouldn't have them stealing all of our money, right? Do you realize 100 years before the Fed started, how much purchasing power was stolen? Absolutely zero. As a matter of fact, your purchasing power went up by 50% 100 years before the Fed started the Fed, and your purchasing power went from a buck down to a penny. That's just sad. The dollar is the new penny. That's really sad to me. And I'm sorry that the government has stolen all of our money. money. I really am. But it's time to get back to sound money. Get back to some gold. Get back to some silver. Now, a lot of people say, but Mike, I got all my money in the bank. It's safe in there. If you think your money's safe in the bank, you are very delusional to start with, right? I mean, just in the last 5 years, they confiscated 25% of your money without you even knowing about, called inflation, right? The bank doesn't pay you enough interest to make up for the inflation, so you've already lost 25% of your money. But Mike, I have the same amount in there now as I did then. Yeah, well, here's the thing. The banks have already lost your money. If everybody went, just 5 or 10% of you went to get your money, they don't have your money. They do not have your money. Do you realize their unrealized losses are approaching $1 trillion? Like $800 billion in losses right now. Now, granted, the federal government's probably going to have to come in and bail them out. Is that going to make you happy? If the Fed doesn't bail them out, what happens? It's called a bail-in, right? They bail in your savings account. They bail it in to the government. Your money becomes their money. Your money becomes the bank's money. The bank takes your money right out of their account to keep them solvent. Once you put your money into a savings account or a checking account, it becomes the bank's money. It is not your money. Do you realize they can give you stock certificates in the bank instead of giving you your money back? Do you want stock certificates in a bank that's $800 billion in debt? I don't think you do, but that's a problem, right? Now, $800 billion, almost $1 trillion, is way more than it was back in the 2008 crisis. So their unrealized losses are way more, right? Now, the FDIC, they got a list. They got a list of banks that are in trouble. And that list has grown so much more than it was back in 2008. So there's so many more banks in trouble now today than there was back in 2008. You know what else? The derivative market. These are where banks gamble amongst themselves. It's like they go and they play a little private game between themselves. Has reached about 3 or 4 quadrillion, not billion, not trillion, quadrillion, and there's about 4 quadrillion out there of these derivatives where the banks playing this high stakes poker game amongst themselves. They bet amongst themselves, and when just one bank goes down, they're all intertwined. It's all going to come crashing down. The government doesn't want you to know this stuff, but if you think your money's safe in the bank, I'd beg to differ. Look, they went in and they bought the bonds, right? And the bonds, they come down 30-40%. That's where your money went. It's gone. And pension funds aren't any safer. They did the same thing. Insurance companies, they don't even have enough money to pay claims. That's why they have to raise the insurance rates on you 30, 40, 50%. In many areas of the country, homeowners insurance is already doubled, right? They don't have the money for your claims. They say it's because of the fires, because of the hurricanes. It's not because of that. It's because they've lost it. They went to the casino and gambled it with the banks, with the pension funds, playing these derivative games, 4 quadrillion of them. When they blow, it's going to be the sound heard around the world. You got to protect yourself. I'd protect myself by getting some real money right now. There's a little bit of gold, a little bit of silver. Gold's going on sale. Silver's been on sale. Everybody said, but Mike, silver was $50 in 1980. It's $35 now. Why would I buy something that's dropped $15 in the last, 45 years? I mean, that's ludicrous, right? I'm telling you, that is exactly why you go out and buy it. Yes, it's manipulated. That is exactly why you go out and buy it. Yes, the banks, they want that silver to stay low. They got 1 billion ounces short of that silver. If that takes off, everything blows up, right? Well, believe me, it's going to take off. What's happening? The COMEX are not able to deliver the physical metal anymore. Having trouble in the gold with that. Having trouble in the silver with that. Once one of these exchanges breaks, probably be the COMEX, could be the London Exchange. We don't know, but once they default, London Exchange is already defaulting. Used to take a day to deliver the metals. Now it takes a day plus 6 weeks. How is that not a default? They don't have the physical metal. They got all these contracts. We talk about that, 400 paper contracts for 1 ounce of silver, playing musical chairs. Believe me, the music is getting ready to stop. Same with the gold market, 200 paper ounces for every 1 ounce of physical gold, musical chairs. The music getting ready to stop. When the music stops, if you're holding the physical, you are the big winner and all the wealth gets transferred to you. It's that simple. I don't know how to make it any more simple. You do you, I'll do me. I'm stacking the physical gold, physical silver. If you like this stuff, give me the thumbs up. Get out there, everybody. Have a great day. Punch that subscribe button, and we'll talk again real soon. Bye-bye now.